Hey guys, my name is Khan and you are watching Trading Hub. In this video, I'm going to show you that what is smart money trap and why smart money traders trap during order block, during structure, during liquidity. So what is solution and how we can improve your trading skill, how we can improve your win rate. So this video is a very interesting for you. So if you are new, subscribe the channel and don't forget to join our free Telegram channel. Link in description. Go and check out. What is order block? Lot of people know when market break the structure and market create last buying candle before the sell, that is order block. In a bullish momentum, last selling candle before the buy, that is bullish order block. And lot of smart money concept trader, they know order block is everything. Order block is a SMC. No, order block is not SMC, and lot of people get confused when their order block is failed. So what is the reason to fail order block and how we can different from others? So first thing you have to understand, order block is not everything. Order block is a just additional confluence before the buy and sell. Main thing is your structure and liquidity and then your entry criteria. Three things you need to know before the buy or sell. Now let me show you exactly how order block trap you and how we can different from others. And this is a very interesting thing you need to know here. So in this case, as you can see, market breaking the structure and pushing downside, continue pushing downside. So what we expect after break the structure in a downside? Once market break the structure is here, you can see in a first attempt, you can see one market break the structure, market just sweep the liquidity. Market must be closed below or above it to complete break of structure. So in a first attempt, you can see market just sweep the liquidity. So this is your not a break of structure. In a second attempt, market close below it, candle close. So this can be your complete valid break of structure. So after break of the structure, where is your order block? Where is criteria you have to follow? You can see here after market push higher and then market must be taken out the inducement or sweep the liquidity before the buy or sell. So in this case market momentum is a bearish, so you have to at least first inducement taken out the inducement, then you can sell, and second scenario if market taken out the liquidity, then you can sell. So right now market trying to go higher, but there is no pullback in a downside like this one. Okay, if market push downside and break this minor low and this high act like an inducement, and some people mark this as an inducement, but this is actual not inducement. Why? After closing below it, this is your internal structure. So before this internal structure, you can see this is your single move. So this is your single move. If anything happen between this high or this low, doesn't matter. This is your internal structure between this high or low. Price must be taken out this low, which one is here, like this one, and then market go higher and then we can sell. And second scenario is here, if market tap here on this order block and give a little bit reaction like here, and then market sweep this high. And another scenario is here, if market push higher, just sweep this liquidity and then I'm interested here for sell. And the next possible scenario is here, if market taken out this high and mitigate something above it, possible here, correct? So this is your unmitigated zone when I'm interested for the sell, correct? So this is your scenario when we can sell for the downside. So these are possible scenario for the sell, and some people mark this as order block, like a bearish order block is here, and people are looking here for sell because they anticipating market momentum is a bearish. Tap on the order block and they putting the stop loss just of it, and this is your high probability entry for sell. No, this is not high probability entry. Why? Because market did not taken out the inducement or liquidity. So why are you selling here? Price must be taken out the liquidity or inducement before the buy or sell. In this case, you have to wait for the taken out this low, because this is actual low and this is your actual high. So price must be taken out this low, then we can sell. And another possible scenario is here, if market taken out this liquidity and then I'm interested here sell. But lot of SMC trader sell here, break the structure, they anticipating sell on the order block, and some people aggressively sell on this order block is here, which is very tiny order block is here, because they anticipating this is a minor order block and then pushing downside. Okay, but in reality this order block is not exist. Main thing is a liquidity and inducement. Order block is not actual SMC. Order block is a additional confluence before the buy or sell. Okay, now let me show you exactly what happened here. You can see here market tap on this order block and giving some reaction, and people are hoping that market push downside. So in this case, where is the maximum liquidity? Where is the maximum stop loss? Because everyone anticipating price tapping here and pushing downside and putting the stop loss just above it. Now let's see what happened next here. Now market pushing downside and creating minor lower low is here. In terms of the structure, this one is your actual low is here, right? And some people mark this as a very tiny change of character is here. No, this is not a change of character. Actual change of character is here. Okay, so must be break this low to confirm change of character, but I'm not in a sell side right now because market did not taken out the liquidity. So at this time, where is the maximum liquidity is here? Above this order block, because everyone selling above it, and if someone sell here, they put the stop loss just above it in case, because this is a very tiny stop loss and this is a maximum stop loss, and these two entry possible for the sell as per the SMC right now. So I'm expecting if market taken out this high and possible tap on this order block is here, then I'm interested here for sell, right? And some people do wrong thing is here. If this order block is mitigated here, they again sell here multiple times here. They know, some people say that a 50% order block must be taken out to confirm the mitigate order block. No, if market tap on the single point, this will be your mitigate order block. So in this case, market already mitigate this order block, so this order block not exist for the sell. Okay, and some people mark this as a change of character is here. No, this is your not change of character, this is your internal structure. Why are you selling here? Okay, and people do wrong thing is here, they're trying to sell here because they miss first trade and they again sell here, but market inducing to you for the sell. You are selling here, putting the stop loss just above it, and most of the SMC trader trying to sell here and create liquidity. So I'm not interested. I don't sell without inducement and without liquidity taken out. Even market push downside or upside, I don't care. Okay, so let's see what happened next here. So as you can see here, market taken out the first stop loss is here and second one is here, because everyone selling here and putting the stop loss just above it, market hit the stop loss, market push downside as you predicted. Why this happened here? Because market did not taken out the liquidity, so this order block become liquidity. So after taking out this liquidity, market can be pushed downside and now you can sell here. This is the best area for the sell. So in this case, after taking out the stop loss, I'm interested here for sell after sweep this high, which one is here, and put my stop loss just above it, because this high already taken out the stop loss. So now I can sell here on this candlestick, which one is here. Let me show you exactly here at this point, because this candlestick is my entry point. Okay, you can sell here, put the stop loss just above it, because this high taken out the stop loss. So there is very highly chances market can be pushed downside. If market actually looking for the more liquidity, then market can go higher, because it's all about probability, because nobody is 100% can say market is pushing higher high and lower low. It doesn't matter. Market is very randomly and you have to think in a probability. So in this case, I can sell here and put my stop loss just above it, and now I'm anticipating price push downside. If market give opportunity for the sell, then I'm more interested for the sell. So let's see what happened next here. So why this happened here? Because market collect all the stop loss and then market push downside and create new break of structure, which one here. After break the structure, when we can sell it. In this case, where is the inducement, and then we can sell. In this case, this is my inducement. I'm interested above it. If market taken out this high, then I'm looking for the sell. Order block is not necessary. Main thing is a liquidity and inducement. Order block is a secondary for me. And some people say, why not this is an inducement? In terms of my strategy, if my plan, this is not a valid pullback for me. So this is my actual pullback is here. Market taken out this high, then I'm interested for the sell, because market break the structure is here, right? So let's see what happened next here. Okay, so after taking out this high, we can again sell here. And I sold after taking out this high. If you don't know how I sold here, you can watch my recent video, which I took 3 position after taking out this high. So this trade has been taken out after taking out the inducement, then I'm interested for the sell. Now you can understand that why order block fail and what is the reason. If you are looking for the inducement, taken out the liquidity, and then you are looking for the entry, then very highly chances your trade will gone in your profit. After applying on your chart, then you can see how it worked very smoothly. So this is the biggest reason to fail your order block, because you are selling without inducement, without liquidity taken out. Price must be taken out the inducement before the market push downside or upside. Market always need inducement before the sell, before the buy, right? If you can see here on the top of this structure, this is the inducement, market taken out the inducement and mitigate something here, and then market push downside. And then what happened here? Market break the structure. So after break the structure, what are you looking here? You are looking sell here, but market did not tap here, but market actually looking for the downside. When we catch here, you can see market sweep this high, and this is an inducement, and market taken out the inducement, and then we can sell on this point. And these are very advanced and very powerful things you need to know. Market taken out this high, as I mentioned in previous video, recent video, I uploaded that how you can find high probability POI and how you can find high probability entry. Market taken out the previous high or low, sweep the liquidity, and then you can sell, then very highly chances your trade gone in your profit. Same thing happen here, market taken out this high and close below it, you can sell here and put the stop loss just above it. Order block is a secondary thing. First thing is the inducement and liquidity. First mark the correct structure, then find the inducement and order block, and then sell, right? Same thing happen here, market taken out the inducement and push downside. And this is our order block. If market tap on this order block, which is a very fine, if not, then you can also sell here. Same thing happen here, you can see at this point market break this minor structure, sweep this high, and you can again sell, put this stop loss just above it. And some people say this is a inducement. No, this is not inducement, this is a single candle is here. So this is our single leg, this is not inducement, correct? And if you don't know how to mark the correct inducement, how to mark the correct pullback, you can join our community. If you interested, you can join community, link in description, go and check out. So I hope this video will help you a lot to understand that why order block fail, and next time you will apply the inducement and liquidity before the entry, before the buy or sell. And this will definitely improve your win rate and definitely improve your trading skill. Without inducement, without liquid, market can't be go lower and higher. Liquidity act like a oxygen in a financial market, you know very well. Same thing happen here, you can see market collecting all the trend line money, and then what happened here, taken out the all money, and lot of people are marking this as a change of character. No, this is a not change of character. And why are you buying here? Because a lot of people say this is an order block. Why are you buying here? Because market is a bearish, and this is not change of character, this is your inducement. After fail this, and you can probably sell here, right? So these are multiple sell entries into downside. And same thing happen here, after taking out the inducement, you can sell here, and you can sell here. After sweep this high, you can sell and sell into downside. These are very interesting thing. Without inducement, your market can't be go lower into downside and the upside. Market taken out the inducement, you can sell here. This is a very interesting, very powerful thing you need to understand. You have to do some practice on the live chart. I hope you guys you have learned a lot of new valuable thing in this video. If you are new, subscribe the channel and don't forget to join our free Telegram channel, link in description. I will see you in the next video. Goodbye and happy trading.